Welcome everybody to another easy algo training. Super happy to be here today. And today I'm going to be going through indicator X, one of my true loves out of all the indicators. And I'm going to be showing you some cool new ways of seeing it. You know, there's only very few ways to learn to use it, but there are different perspectives we can use to demonstrate these varieties of ways to use. So today I'm going to share a new perspective or an old perspective, but maybe something new for you to just give you a new understanding of how to use this incredible tool. So the key to using Indicator X is understanding the multi-time frame analysis, understanding how to determine your directional bias. Now, directional bias is an important understanding for any type of trading strategy that you're using. And today I'm going to be going through a few different ways how to determine directional bias and how to use it with Indicator X and potentially use it with other indicators or other strategies as well. This is the most important part of your trading, is understanding directional bias, especially when it comes to using Indicator X. So what is multi-time frame analysis? It is the art of using multiple time frame charts to predict market moves based on probability. So what we're doing over here, we're going to use the indicator X, which gives us these three market phases, which is the contraction, expansion, and trend phase. And we're going to marry it with your directional bias. This essentially is the strategy that we use for indicator X. We're using directional bias, and then with that directional bias, we're tracking these three market phases, and based on those, we're creating higher probability trade setups. But the most important first step is to truly understand how to determine the directional bias of the market. The entries are easy using Indicator X. It shows you pretty much the best entries you can find. So when you can learn to marry these two together, it creates the full strategy that we're talking about within Easy Algo. So how this works is understanding directional bias is really understanding the flow of the market from a higher time frame. So here's a basic example I'm giving you. I'm on a 2-day chart, and there's variety of different higher time frames you can use. You can go extremely high into like weeklies, 2-day, 3-day charts, monthly charts, daily charts, 12-hour charts. The higher the time frames we go, the more solid our concept of the direction is, because the people who drive the market, the market makers, the big players in the market, they operate on the higher time frames. So when we can see higher time frame trends that are changing, just like in this example I've given you over here, this is a 2-day chart, and you can clearly see price has gone up, and then we get this rotation at the top, and you can see it's clearly going down, represented by these bearish flatback candles. Now remember, each one of these candles represents 2 days worth of price action. And when you can see consecutive bearish candles in a row on a 2-day or a higher time frame chart, it can give us an example that the trend is changing on the higher time frames, which gives us this understanding that whoever is moving the market, remember the market makers, these big players, these are the people that actually move the market because they enter with such large amounts of liquidity. So when they decide to change the direction of the market, that is when we want to be able to hop on that ride with them, which makes it very important for us to be able to notice and identify when we get these shifts in this directional bias or this flow in the market. So you can see on the higher time frame here, we've determined that the market is bearish. We got these bearish Heiken Ashi candles, and we do use the Heiken Ashi a lot for this, which I'll go into more details. And then we come on to an entry time frame on the 15-minute. And since our one-sided bias over here, we've determined that the market is going down. We've determined that it's bearish. So when we come onto our entries, we're only looking for short positions. We're not going to change our bias into looking for longs. We've got a one-sided bias. We've determined we're short. We're only looking for short positions. And we're only looking for short positions every time price is above the value. So on indicator X, we've got these value lines, and they just show us where is value located on the chart. And whenever you want to enter a sell position in this example, we always want to enter above value. And as you can see, every single one of these would have been an opportunity to catch. I like to see this as like a wave. You've got a big wave, and we want to catch. You're a surfer, and you're trying to catch that wave. And if the wave is going down, we're looking for the best wave to catch that overall wave into this downtrend. And as you can see, it gives us, indicator X gives us the optimal entry positions to enter that wave or to catch that downtrend. And we'll go into more details about the entries just now. But the key here is to follow the higher time frame flow of money. And the higher time frame can be anything above a 4 hour. It can be a 4 hour daily, a weekly, a monthly. I was looking at a 2-day. It can be anything. You can determine what time frames you like to trade on. I'm not getting into too much of the specifics of the strategy, but just pieces of the strategy where I feel people need to know more and understand to help them understand how to use this better. So the key is to trade in alignment with the big money, because the big money is what moves the market. And you have to always think about this. That's why this is one of the most important parts of mastering this strategy, pretty much most strategies. So what happens is we get different market conditions. We get efficient market conditions, which is a balanced market. And you can see we get more of a ranging. Now, efficient market conditions are conditions whereas the market makers, they love these conditions because it's very easy for them to make money. It's very easy because it has a very defined support region and very defined resistance point. And there's a lot of market participants. Whenever the market ranges, lots of people get in the market because they're scalping and trying to make money off the market. So when we have these market conditions, these are the market conditions by which whoever the big money is or the market makers are, they love these conditions. But then we get these inefficient market conditions. Now, these are going to be the best conditions for us to trade. These are going to be the best conditions for us to make money. Because as soon as we get imbalances in the market or inefficiencies occur, which are also called imbalances or fair value gaps, it's showing that there's big money in the market that's pushing the money in a specific direction. So if we can notice these imbalances or separations within the candles early on, it can give us a clue that we have big money coming, which is actually imbalancing the market. So you see a balanced market occurs, and then all of a sudden over here, we get a large amounts of demand into the market, and it pushes the structure out of balance. And as soon as we can notice that that structure has been formed into an imbalance or an inefficient market condition, we know that there's a lot of extra money coming in the market. And this is where we can actually hop into the market, especially if this happens on higher time frames. If we can spot inefficiencies happening earlier on in a higher time frame, this can give us big clues that there's going to be a trend that's going to be starting. So we can immediately get in on the lower time frames, anticipating that we've got this rush of new money that's entered into the market, and it can give us a big clue as to what direction the market's going to be moving in. So how do we determine directional bias? There are a few different methods to determine directional bias, and I'm going to share 3 with you today that you can use. A lot of this part of the training already, and I might throw in one that we haven't done before. So first of all, we can use the Heiken Ashi candles. The Heiken Ashi candles are trend candles. They're trend smoothing candles. So they're actually designed to take an average of the candles and smooth them out and show you an overall of what the candle is doing. So when we start to see like a downtrend happening in this example here, we've got multiple bearish candles starting, and this is a Heiken Ashi, which is already smoothing out the trend. It is showing us a high probability that there is a bearish trend starting or continuing. Remember, I'm on a very higher time frame, so you want to look on a higher time frame for this. I like to always look on a daily chart and then maybe go to a 12-hour. But if you like to do more like lower time frame scalping, you can use a 4-hour as well. But I still recommend always going to have a look on like a daily time frame to see what is happening on the higher time frames. Because remember, what's happening on the higher time frames is the decisions these market movers are making, because they operate on the higher time frames. So if we can notice on a very high time frame that the market is going bearish, then we know that this is a potential idea that these market makers are deciding to change the direction of the price. Remember, they can move the market with their orders because they enter the market with these massive orders, $100 million, those kind of things. Another method we can use is we can use the moving averages. So if you're on a higher time frame, let's say a 4-hour or a daily, and you can see prices underneath the moving averages, let's say you're using a 200 moving average, and this gives us a clue that the market is trending downwards. However, moving averages is not one of my favorites. I will show you examples today, but the reason it's not my favorite is because you have to keep changing the calculations of it. You know, depending on what moving average you're using, every time you're on a different time frame, you use a different, you can change the settings. So it's one of those calculations that you would keep needing to change and tweak to suit the conditions of either the coin you're trading or the conditions of the market you're trading. Whereas the Heiken and She candles, you don't need to ever change. They just stay consistent. But I'll show you examples of how you can use the moving average as just an added companion confluence. You know, it can be beneficial, but I like to always use the moving average as a companion tool, just as an added confluence, just to help us, you know, to get more confidence in the trade that we're going to be taking. And then we can also use Trend X to determine the directional bias. Trend X is an excellent way to determine the direction of the market. And I often talk about not mixing Trend X or Indicator X too much because it can create a little bit of confusion. But I will just show you the basis of this training I want to focus on is just determining the directional bias of the market and then how to find very easily entries with Indicator X. And these are going to be three methods that I'm going to be showing you today. There are many other ways to learn directional bias as well. And, you know, if you've got your own strategy for doing that, then you can just apply that. But step number one is always, what is the direction of the market? And this is something that I would focus a lot of attention on. If you don't understand how to fully understand the directional bias, then spend extra time mastering this, because if you can master understanding the directional bias, the rest is easy. The entries are easy because you are understanding the flow of the market, the direction of the market. And if you understand the flow and the direction of the market, then even if you enter a trade at a little bit of the wrong position, it will end up still going the right direction. And that's the thing, you know, your entries don't have to be as perfect when you can master your directional bias, because even if you enter a little bit off and you just hold the trade, eventually it's going to be moving in your intended direction, because your ability to determine the directional bias is so good. You've put so much time and effort into mastering how to identify this, and that will improve your overall strategy and trading. So what are the benefits of adopting a directional bias? There are a lot of benefits to doing this. You can increase your probability of your winning trades, because think about it. If you can identify the movement of the market, like I was saying a few moments ago, and you have a bad entry, let's say your entry is not a perfect entry. If you just hold on to that trade long enough, it will still end up moving in the direction you intended for it to move in. And this all just depends on what kind of a trader you are. If you're swing trading or you're scalping or you leverage trading, all these factors will come into play with this. So you'll have an avoidance of needless losses. You will lose less, much less, if you get your directional bias down. If you master how to identify this directional bias. Your consolidation of focus, it will help you be able to focus more and to focus on what really counts, what's really important. Because when you come to the charts, I don't know what process you have, as soon as you arrive at the charts every day, every person or every trader has a certain process that they go through. And I'm not sure what your process is, but it's important to identify what is your specific process that you use when you get to the charts. What is the first thing you do? What is the first things you look at? And the most important thing to start first is directional bias. So depending on what it is that you're currently doing, I would definitely make directional bias a primary focus. It can help you with reduced trading as well, because, you know, a lot of times traders love to just be in a trade. And if you come to an asset that you're following and it's not in a directional bias that's confirmed, then this can reduce your trading and you don't take the trade. You say, I'm not going to trade today because it's not giving me a strong enough directional bias that I'm looking for. So it can end up reducing trading, and then you only trade when you're getting a strong enough confirmation. A lot of traders will come to the chart and they'll want to trade every day, you know, and the more you have this desire to trade every day, the more you'll force trades to happen and you'll look for things that are not there. So by adopting this technique, you will also protect and preserve your capital, because you'll be just waiting for stronger confirmations. And also one of the most important things is that when you determine a directional bias, it's only to one side of the market. So if suddenly you've looked at the chart and it's showing you that there's only shorts happening, there's a downtrend and you can see the directional bias is down, you're only looking for shorts. So there's no need to observe on the chart or to mark up in anywhere in the chart looking for long positions. So it allows you to only focus on short trades. And it's important to only have a one-sided bias. When you determine your directional bias and you feel confident on it, you only are focused on one side only. You're not going to suddenly go for a short position and then you're going to go for a long position. Then you're going to go for a short position. Then you're going to go for a long position, because when you jump from short to long too frequently, this can take a lot of mental capital. And this is what I was talking about, preserving your capital, not only your physical capital, but your mental capital, because trading can take a lot of mental capital. It can drain you very, very much emotionally and mentally. And the key for us as a trader is to adopt a strategy and a style that leaves you feeling clear. When you look at the charts, you can see clearly. It's not draining you. You know, you're only coming to the charts. You're only operating when you're feeling clear and you're not overdoing it, because it's very easy to overdo trading. When I started trading, I would trade for like 10 hours a day and I'd be winning and losing and winning and losing and shorting and longing, and just, you know, you like a cowboy, you just end up going crazy on the charts. So the potential to leverage opportunities, once you master the directional bias, once you get a very confident understanding of it, you can actually increase your leverage in those positions, because by understanding the direction of the market, you're going to know that there's a guarantee it's moving in that direction. There's a guarantee it's moving down, regardless of what happens. You know, obviously there's a lot of ups and downs within this downward movement, because the market doesn't move in straight lines. But you know, the overall market, if you hold that coin for long enough, it's going to be moving in the direction that you determined with your directional bias. So this is what I was saying, the defined one-sided market bias. It helps you reduce complexity and create simplistic framework to focus on. If it's a long market identification, you only focus on longs. If it's a short market, you're only looking at shorts. You're not going to chop and change from long to short to long to short. So you won't need to think about longs and shorts, only shorts or longs, one or the other. And this is quite important, because every time you shift from a long to a short position, your brain has to actually start calculating and organizing from a different side of the market. And that can take a lot of mental capital, and it can also set you up for disaster if the market is trending in only one direction, like longs, and then suddenly you're looking for a reversal, so you're trying to catch a short. It can end up just taking you out. I mean, I remember at one stage when I was trading, the market was clearly going down, but I was just so into reversal trading. I'm always looking for where I can get in a long position. I just get taken out and taken out. instead of just surrendering and trading with the directional bias and not needing to do this reversal trading. So you can trade a continuation trading, and that's what we focus on when we identify the market. Say the market is going down, it's short, we're looking to catch continuation trades. We're not looking to catch a reversal, because that is not what we focused on with this strategy. The reality of directional bias is simple, and yet it's one of the hardest disciplines to master. So make it a priority to learn, to understand, to master it. Most traders can't overlook the temptation to trade in any direction at any time. And I'm definitely guilty of this, and I'm sure a lot of you guys are as well. So it's really training yourself to be very intentional with how you trade. And when you determine that directional bias is short, you're just sticking to shorts. It's really will simplify your trading, and it will make your mind clear. It will preserve your mental capital. Most traders give up on directional bias only after a few losing opportunities or getting caught in reversals. So, a lot of times you will get stopped out. It's part of the game. But the key is, not whenever you get stopped out, don't change the strategy. Don't change how you do things, because this is something that traders fall into as well. I'm so guilty of this in the beginning when I started trading. I would try a strategy out, and then if I lost in that strategy, I would look for a completely new strategy or a different strategy, thinking the one I was using is not working. But you have to test out a strategy over time, because trading is a game of probabilities, and you're going to lose a certain percentage of your trades no matter what strategy you're using. It's just going to happen. There's no one strategy that is 100%. If there is, then I probably wouldn't be here. You guys wouldn't be here either. So the key is if you stick and learn and master this directional bias, and you do get taken out a few times, just keep doing it, because the probabilities will be in your favor in the long run. And as a trader, we can't calculate our P&L per day. If you're looking at your losses and wins per day, it's going to completely throw out your emotional thinking and how you operate emotionally. The key is to look at your P&L over a large period of time. So over a month, look at your win rate and loss and your losing rate, not every day, because you're going to have some bad days, some good days, some bad market conditions, good market conditions. But if you just stick to the strategy like we teach it, over time, you will have more wins than you will have losses. If you've employed good risk management like we teach it, and you just follow the strategy, most of the time the strategy is extremely simple. But the challenge is the psychology, it's the emotions of the traders, and it's just their ability to follow the rules of the strategy. For a long time, I wasn't following the rules of the strategy. I was given amazing strategies by amazing teachers. I didn't follow the rules. I ended up losing. Guess what I did? I want to look for a new strategy. I find another amazing strategy. I don't follow the rules properly. I lose. I look for another strategy. And a lot of traders have this shiny object syndrome, where they're just keeping jumping from one thing to another, because they're not getting their 100% success rate or win rate, which you won't really find. So this is the fatal flaw. And this can be your major edge if you commit to this one thing, is mastering directional bias and understanding how a directional bias works. All right, so let me take you onto the charts now and show you a couple of things that I've been talking about today. One being focusing on the different methods of identifying this directional bias. So I'm going to show you the 3 different ways that I use, and that can be very beneficial to you. And I'm sure you might have your own ways that you figure out as well, but there's always room to open up to new ways of doing things and new ideas. But I'm going to show you today the 3 different ways, and potentially one other which we teach in the strategy already. So how we like to do it when we focused on indicator X, and I hope you guys have a basic idea of how indicator X works already, because I'm not going to go into too many details of like the whole strategy or anything like that. I mean, I suppose I can go into some details, and I'll answer some questions. But basically, we've got indicator X on the chart here. We've got two charts. This is our lower time frame chart that we use for entries. And you have to find out what kind of time frame trader you like to be. I like to look on the higher time frame on a daily or a 12-hour chart. And then I like to enter on either a 15-minute or a 5-minute chart. That is the way I like to trade it. It's not too low of a scalper, and I use a high enough time frame to get accurately understanding of the directional bias of the market. But if you are a scalper and you want to do a 4-hour higher time frame and a 1-minute entries, you can do that. If you want to even go to even a higher time frame, if you want to do more of a like bigger swings, you can always trade on like a 3-day over here or even a weekly, if you really want. And then obviously on the entry time frame, you would have a 1-hour time frame for your entries. But I'm just going to stick to the strategy I use. And remember, the strategy stays the same no matter what time frame you're working on. It's the same strategy. The only difference will be if you're going more towards bigger swings or more towards smaller scalps. So I use the 12-hour here. So the first method we can use to determine this higher time frame bias, this directional bias, is we can observe the candles, the Heikin Ishi candles. So I've got Heikin Ishi candles on the chart here, and we do have a Heikin Ishi indicator that comes with the Easy Algo set. Yeah, the Heikin Ishi overlay. And what it's designed to do, it's just designed to overlay the normal candles, so it doesn't interfere with the actual indicator itself. So the main method we're using in this example is we're just looking at the candles. We're just looking at the candles. And you can see over here, at this point here, you can see we've got a nice flat back Heikin Ishi candle over here. And then we've got a big one and a bigger one and a bigger one. So when we start seeing this succession of candles getting bigger and bigger, I mean, after you saw this one over here, this is quite a big candle. And generally, if you get one big candle, you can see it's also an engulfing candle. So if you look at all these other candles underneath here, it's engulfed all of these previous candles. You can see it broke above this. This would be a little key level as well. So you can see the strength in this candle, a strong flat back bullish candle breaking up. This could have been a sign already now that there's a lot of demand entering into the market. You can see we were on a downtrend. So there's a few factors you take in mind. We were on a downtrend all the way down to here. And then suddenly over here, we've got this shift in candles. We get this rotation occurring, and then we get this big candle. This big candle would have been a strong sign that the market is now moving into a different directional bias. You can also do trend lines. I know a lot of people love their trend lines. You can draw a trend line and you get trend line breaks that occur. But I like to just use specifically these flat back candles. They work great. And there's other confluences you can use as well. So another method as well, which is part of the main strategies, we're using the higher time frame value line. And you can see when we get a break of the value line in combination with these flat back bullish candles, that can be extra confluence. So at this point over here with this candle, this could have been a very strong signal. We've got a very big, you can see this second candle is bigger than the first one, which is showing all this momentum coming up. It's also breaking this higher time frame value line, which is also what we look for, because especially a higher time frame value line break, especially at this location, becomes a good place to look for lower time frame entries, because we know that these value lines on higher time frames, they act as this dividing point between the bearish and the bullish market. If price gets just above a higher time frame, only on a higher time frame value line, then we're looking for our longs on the lower time frame. So basically with this strategy, number one, we're looking for these Heikin Ishi flat back, and this also might require for you to do a lot of back testing. Like I did hundreds of hours of back testing this strategy, because the more you back test, the more you can see that the probabilities of winning in the long run are in your favor over losing. And that's the one thing it can give you, because a lot of times a strategy can be an excellent strategy that you can trade, but your confidence in the strategy can be the one thing that's making you fail with that strategy. And by back testing a lot, it can actually help you build confidence in your strategy. Because if I backtest this and see that I had 6 wins out of 10, that's a very good strategy. A 60% win rate is an amazing strategy. So, and if it's a 70%, even better, 80%, even better. But the important part is that you feeling confident with the indicator that you're using, with the strategy that you're using, and that confidence will help you make better trading decisions. You know, we are affected emotionally. This is something that's so important to understand when you're a trader. Emotions affect your decision making. All decisions are made emotionally, and emotions can alter your perception of what you're seeing on the chart. So if you're not feeling confident, if you're not feeling confident in your strategy, if you're not feeling confident in your trade, it can make you actually pick losing trades. So it's so important to understand that our emotions are one of the biggest factors in winning in trading. One of the biggest factors, and there's a lot of talks on YouTube you can find that focus on, and I will talk more about this in the future as well. I have done in previous videos, but I'll talk a lot about how emotions can affect this decision making and perception. Your emotions affect how you visually perceiving the chart. So you'll get into a trade that seems like it's the absolute best trade to get into. And then afterwards, when there's no emotion and you observe it, you'll say to yourself, I don't know why I got into that trade. It was like, there wasn't a good trade to get into. But at the time, you didn't see it because emotions can affect our ability to perceive visually as well. So step number 1 here, guys, for directional bias, we're going to use the Heiken Ashi. Step number 2, we're going to use the value line, the higher time frame value line. And you can see that this coin I've picked was the biggest mover of the day today, CVX, and it's done quite a lot actually in this day. I think it's up like 60 or 70%. It's pretty amazing for the day. Okay, so what I'm going to do is now I'm going to also add in, I'm going to come to this exact location where we would have entered. So I'm going to do some back testing with you, and I'm going to show you how I actually do back test. And then I'm going to show you the different methods of this directional bias. So you can see over here, this was the point on this candle here. If we had waited for this candle to close, a lot of times I tell traders to wait between 50, 60% of a candle close before you get a confirmation, which means is if you were going to enter on this candle, we would wait. If you see over here, guys, you can see we've got a candle. We've got a little timer ticking down. I don't know if you can see over here. You can see that there's a little clock that's ticking down. So this little clock is showing you we're on a 12-hour time frame, and this clock is ticking down from 12 hours to show you every time we get a candle close. So right now we've got 8 hours left until we get the next candle close. And what you can do is I recommend to always use about a 50, 60% candle close before entering that trade, just to confirm, because sometimes the candle can push up and up and up and then suddenly be drop down and down and down, like it's done here. But if we can enter 50, 60, 70% confirmation, so we're waiting for 70%, let's say, of the candle to close before we look for our entries, just as a more confirmation. So if you didn't know, this little clock shows you no matter whatever time frame you're on, it's going to count down, and this is going to show you how much time you have left until that candle will close. So you can see if we looked at entering on this candle close over here, then it would be exactly on this level that I've marked this line out here. And if this was the level we were looking to trade, I'm on let's just confirm what time frame. I like to enter on a 5 minute. 5 minutes are great because they give you a lot of entry opportunities. And you'll see here how many opportunities we had. I mean, it's pretty amazing. If you can time this perfectly, we know for certain that indicator X, you'll see over here, it gives you the ultimate best entries. You're not going to find a better indicator out there that will give you as precise entries as you will get with indicator X. This is 100% certainty. I've looked out there, I've tested every single indicator there is. It does not exist, 100%. So the main thing now is, if we know that indicator X gives us the best entries, then our entries need to be based in alignment with the directional movement. This is why in the beginning I said directional bias is your key, because if we know with certainty, if we know with a high degree of certainty that the market is moving up, then we know with a high degree of certainty that every time price is underneath the value line where I've marked in the green, these are going to be our entries. And you can see, guys, these would have been perfect entries. I mean, basically virtually no drawdown. You would have received no drawdown over here. And if we keep going, you can see we've got another one over here and another one over here. I mean, it's pretty amazing. I mean, sometimes it blows my mind. And I haven't even tested this chart yet. Like, this is the first time I'm actually going through this with you with indicator X. Look at that. Perfect entries. 1, 2, 3, 4, 5, 6, 7, 8 perfect entries, like absolutely perfect entries with zero drawdown per entry. But the most important part, this would have been meaningless. The entries would have been meaningless if we didn't know what direction the market was moving in. So we knew with certainty that the direction is moving up. You can see clearly with these Heikin-Nishi candles. So it gives us a lot of confidence in this trade. Something else we can use, which I did mention, is we can use the EMAs as well. So you can see EMAs is also a brilliant tool to use as a companion. I don't like to use it as the main source of determining the directional bias. I like to use it as an additional confluence or an additional little tick on the list saying, yes, you are in the right direction. So, and look here, if we had taken it into consideration, if we had taken in consideration with our flatback Heikin-Nishi, so we got flatback Heikin-Nishi over here, that's our main tick off the list. We're like, okay, directional bias, we know it's breaking structures over here. It's an engulfing candle. It's a flat back. It's a big momentum candle. This can give us a very big confirmation. Then when we add the EMA, so the EMAs, we basically add on the entry time frame. If I had to put the EMA on over here, you'll see it doesn't really work. It's kind of cutting through, so it wouldn't have really helped us. But what we do is we use it on our entry time frame. If you're going to enter on the 5 minutes or the 15-minute chart, you pop open the EMA, and I like to use the 200 EMA. You can see over here, the 200 EMA. I find it works very good because what the EMA is doing, it's creating an average based on 200 candles. It's calculating 200 candles, and then it's creating an average of the direction of the movement based on those candles. So it's taking an average of the 200 candles, and it's determining the movement of the trend based on that. So you can see here at this point over here where we've determined this flat back bullish candle, we've got the same thing happening over here, right over here. And you can see we're above the EMA as well. So the EMA is acting as another confluence saying, cool, you are in the right direction. If we're starting to see, you can see these contraction boxes are forming above the EMA. You see the EMA is down here. The contraction boxes are forming above it. When the contraction boxes are forming above an EMA, the chances of it moving in an uptrend are extremely high. You can see same thing over here. We've got another contraction box above. We've got the EMA below. Same thing here, here, here. You can see all of these contraction boxes are above the EMA. When the contraction box is above the EMA, and we've got this confirmation over here that we're in a flat back, higher time frame. Remember, higher time frame, bullish, flat back, Heikin-Nishi. This just gives us so many confluences that can confirm this trade. So definitely, I would definitely recommend adding the EMAs onto your chart just as an extra confluence and trading in alignment with them. But remember, not using it as your main confluence, using it as an additional companion indicator. Just confirming that your decision is right. Because once you get these multiple confirmations coming from different angles, it can give you more confidence, can give you more certainty. And when you feel confident, certain, you make better trading decisions. And that is why it's so important to have multiple set of tools that we can use to just help us with confirmations. Confirmations are really important, and they can really, really help keep you out of trouble and keep you on the right side of the market. So you can see we had fantastic alignment over here. We're above the EMA, and you can see it basically, we were above it over here as well. I mean, we were above it over here, and we were still in a good position here. But I was just marking off the defined phase where we got these flat back confirmations over here. Every time, guys, look, every time we could have entered. And depending on how you like to trade, if you were a swing trader, you could have entered at the bottom and held all the way. You could still be holding this trade. If you were a scalper, you could be exiting at the liquidity lines. Let me turn on the liquidity lines for you and just give you a quick rundown of scalping and how great scalping works with the strategy. I mean, it is phenomenal. If you had entered here, you could exit at any one of these liquidity lines. Remember, these liquidity lines act as stop loss levels. So they're areas where we can exit the trades, and there's so many of them. You know, I don't like to leave them on all the time because sometimes they get very busy and it kind of clutters the chart. But yeah, you can, sometimes we can turn them down so there's not as many of them showing on the chart. Let's see. Oh, wait. Oh, we turned it up to show. So sometimes I'll turn it up just so it shows only the key swing high and the swing low points and doesn't show too many of them. There you go. So if you were scalp trading, you could have entered underneath the value line, and you can just exit every time you hit a liquidity line here or here. You exit, and then you wait for the next round. You enter underneath, and then you exit at a liquidity line here. So we could have done multiple scalp trades on this here. We could have entered down at here, and you could exit at any one of these liquidity lines, and the same thing playing out over and over. So this is a nice way that you can do it, is you can enter underneath value for longs, because remember, guys, we're only looking for longs. Our one-sided bias now, because we've got these flat back candles on the higher time frame, and you can see, look, we've got multiple. There's no bearish candles here, no bearish candles at all. We have a succession of bullish higher time frame candles. We've got price above this 200 EMA moving average over here on our entry time frame. So we are 100% confirmed we are only looking for long positions. In no part of us is ever going to look for a reversal. So like, you could have caught this reversal here. I mean, if you look here, you could have caught this reversal and it reversed. Let's see how many percentage it reversed. You could have caught this reversal, 12 to 13% reversal. You could have done that. But with this strategy, we're just focused on one-sided bias. You're not going to suddenly switch now and start doing technical analysis and finding out how you're going to catch a reversal within this trend, because now we counter trend trading. Counter trend trading is when everything is confirmed an uptrend and then you're still looking for short positions within that trend. It is extremely risky. It can work, and you can, you know, if you have a high degree of training and you understand, you probably could do reversal, but it's so much easier to just trade with the trend. You know what they say, the trend is your friend. So once you identify the directional bias, which is just the trend of the market, you just trade alongside that trend and you keep trading with the trend. And then you're using our wonderful, amazing indicator X to just get these insanely good entries. I mean, look at this, like it doesn't get better than that. And then obviously we can use our other companion tool, which is we're using our TDIX as taught in the strategy, you know, with our shark fins. And you can see here, if we want even more confirmation. So the TDIX is a companion tool, just like the EMA. And that is why if we use these companion tools, they can give us very, very good timing entries. Like you can see over here, we got shark fins here and here. So these would have been great entries. If we come down a little bit further, we didn't get a shark fin over here or here. We got one over here. So this would have been our entry. So we might not have taken every single one of these. If we had used the TDIX, we would have just taken more confirmed ones. And that's what's so great about the strategy, is we're just sticking to confirmations. But essentially, anytime price came under here, we could have been an entry for us to catch this in this uptrend. So that is one way. The other way I wanted to show you, which is using, now I don't want to confuse you guys too much, but using Trend X as a tool to identify the trend can be very beneficial, But I want to show you how it can also possibly confuse you. If I turned on Trend X over here, you can see, and I'm only going to keep the pivots, the Trend X pivots on over here. So I'll turn off all these other things. When you're trading with indicator X and you're using Trend X, you don't need to use all these other lines. You basically just focus on using the pivot points, which means we're only going to turn on these two settings, which is weekly pivot and the pivots middle, top, bottom. And for monthly, we do the same thing. And we can use this as a more of a confirmation tool as well. So I'll turn off the monthly and I'll just use on the weekly to get confirmation. So you can see over here, you can see there's different layers we could have entered. If I'd entered over here, which is the demonstration I just showed you, I'm going to show you how we're layering on confluences over here. If we'd entered over here, this would have been our entry if we'd gone off of the Heiken Ishis, using the Heiken Ishis to determine the directional bias and using the EMA. This would have been the point round about here where we would have looked for our entries. And that would have been fantastic. We would have got some great entries. If we wanted to add in Trend X, which I've added to the chart, and you can see we've got the 3 grids over here. I'll just make this yellow, and this is the weekly pivot. We wouldn't, with the Trend X strategy, this is where I don't want to confuse you guys too much about mixing strategies together. If you're going to be using the Trend X as a companion tool, you're just going to be turning it on and off to have a look. You're not going to be trading predominantly the Trend X strategy. You're just going to be having a look, and you'll see in this section we would have entered here. It wouldn't have been good on the Trend X. It wouldn't have been good because we're under the grid. So that would have created confusion for a lot of traders. It would have been like, okay, it's saying go long over here, but in the Trend X strategy, it's underneath, so it's saying go short. But then if you look at this point over here, this is where it could have multiplied the confirmations for you. And this is where, at this point, you possibly could have even entered a bigger position size because we have so many confluences. At this point over here, we've got 3 confluences. We've got all of these. We've got the flatback Heiken Ishis, because if I just mark this area on the chart, it's basically over here. We've got flatback Heiken Ishis right over here. We've got, it's above the EMA, and now it's breaking above the weekly Trend X. It's breaking above the weekly. So we've got 1, 2, 3 confluences in our favor at this point. So from this point onwards, we are 1000% confirmed that we're in an uptrend. We can be super confident at this point right here. And you can see we even got a nice break. We've got this big momentum candle breaking up onto the grid. So this is where we can use another tool like Trend X as another companion tool just to give us more confirmation, but we can't follow it rigidly. If we follow it rigidly, then we have to go follow the Trend X strategy. So when you're going to be mixing in indicators, you have to take multiple aspects into consideration. You have to look at all of the little pieces. It's like you're building a puzzle and you're putting all the little pieces together, and then suddenly they all fit in perfectly, and everything, the whole story unfolds, the picture comes out perfect, and you feel very confident in this trade over here. You would have entered here. And then from this point onwards, you can be very confirmed that you are only looking for longs. And then you can see the next week opens up and we're above the grid as well. So we got more confidence over here. So from these points, if we add these all together, you can see how you can use them in your favor to stack these probabilities and to identify. Remember, the main point here is how to identify the directional bias of the market. And by using these tools, by mastering how to use the Heiken Ishis and to identify. And remember, guys, the Heiken Ishis over here, I don't know if you knew this, but if you click on the settings, you go to the Heiken Ishi settings over here, we've got what's called the flatback candle alerts here. And you can actually set alerts. So it will alert you every time it notifies a flatback candle. And you can select what kind of time frames. It works on multiple time frames. So if you want to select it to let's just say I only wanted to determine the 12-hour, I can go over here and I can select 12 hours. And now I'm only looking for bulls or bears or both. So if you do bulls, it means it's only going to look for bullish flat back candles. If you do bears, it's only going to look for bearish flat back candles or both. So now if I select my alert and I turn it on, it's only going to notify me when I get a 12-hour flat back candle, whether it's bullish or bearish. So this is also a great tool to use. If you've got a few tokens that you're following, you can just set alerts, these flat back alerts, which are going to help notify you when we get flat backs in the market, which is also going to help you be able to determine these directional bias and figure out how that works. So it's another tool on how to use, you can use alerts so that you're not scrolling through bunches of charts every day. You can pick, say you've got your few tokens that you like to trade. You just pick them, you set alerts on here, and then you can just wait for these alerts to fire off. And you can set it on whatever time frame. If you're trading on 8 hours or 4 hours, or even just a daily, you can set the daily. And you can do multiple. So you can set the dailies over here. Then over here, you can set the 12 hours. I can set 12 hours on both. And then over here, I could even set on a 4-hour. So I can be notified when a 4-hour goes off, a 12-hour, or a daily. So you can almost help you track the movements of the asset that you're looking to trade. And you can understand when is there more volume coming into the asset. Because whenever we get these higher time frame flatbacks, it's showing us there's more volume entering into this asset, which is showing us more demand or more supply, just depending on whether you're looking to short the market or long the market, or either way. With the both setting, it's going to let you know either way whether it's longs or shorts. So that's a nice tool to use just to help you find out when this is going to occur. And then obviously we're going to use our value lines as well. But you can see how well this works. Let me quickly have a look at another chart over here. I'm just picking random charts. Over here, you can see over here, we got the same story, pretty much the exact same thing that's happening. I'm on the 12-hour chart over here. We got this very big flat back candle. See, we got the same confluence happening here, the same confluence. We've got this big momentum candle, this flat back candle pushing up, and look, it's breaking the value line. So we've got two very strong confluences, our strongest confluences actually, that are happening, at once. Flat back, breaking through this higher time frame value line. So now if I come onto the chart and if I just mark out where this level is located, it would be over here, somewhere down here. So from this point onwards, and you can see we might have missed the initial movements because sometimes we can't time it perfectly. Like if you wanted to time this move perfectly, you would have actually had to get involved over here. But here it's still showing rotation of candles. It's not showing these flat backs yet. And then suddenly we got this big candle. I mean, you could have started to look for entries at the 60% close of this candle, which might have not been as high as this, primarily because you would have seen that it's breaking, it's engulfing. Can you see it's breaking all these structures of the previous candles before it? When price comes down and then suddenly starts breaking these structures, we get the break-in structures happening over here. It can be a big clue to us that there is more demand entering to the market, more liquidity is coming into the market, more volumes coming into the market, and this can perk our interest when looking to trade this asset. And then you can see over here, we have another confirmation. If you look at the EMA, price is above the EMA and price is continually above the EMA. So we would have looked for these trades below the value line. We didn't get any of them until over here. This was the first confirmed contraction that we got. So this would have been our ultimate incredible entry over here. And I'll show you there's multiple reasons stuck in here. You can see over here, we've got amazing shark fin, which is our companion tool, giving us a go. We've got price finding rejection exactly on, let me actually remove this so you can have a good look, exactly on top of this EMA. We're getting this rejection and we're getting this pin. Look at the candles. These are tweezers, which are reversal candles, and prices underneath the value line over here. So this would have been a very good place to look for an entry. There's also other confluences. If I look over here, we've got its prices hitting a demand zone as well, which I always like to incorporate a bit of price action into the mix. Price action just gives us an extra layer. If we're adding in all these tools we've got and we're layering in price action, I mean, just imagine how much of an advantage you have, how many tools, how many confirmations, how much more confidence you can have, especially when it all lines up. Over here, at this point, everything lined up. We've got the EMA lining up. We've got the TDIX lining up. We've got these flatbacks lining up. And, it's all just working in our favor, saying this is the great place to look to enter a trade. If we'd entered this trade, it would have been an amazing trade. 7% would have been fantastic. So this is how we're combining all these tools to look for directional bias. Pramod also talks about how to use the EMA on the 1 hour chart. He likes to use the 1 hour chart as well. So like you can always come onto a 1 hour chart to check out the EMA. You can see over here. Look at this, guys. Look here. From this moment, you can see this token has been underneath the EMA. So we're in the 1 hour EMA. It's been under the 1 hour EMA from over here. And you can see price, every time it comes up, it rejects. We get this rejection into the EMA. We get rejection into the EMA over here. All these rejections into we get rejections over here. So this is showing us that we're in a confirmed downtrend. And you can see on the opposite end of the scale, we've got the EMA over here. It's above over here. As long as it's holding above here, I mean, look here. If I go in the chart, look here, perfect entries for our long entries, perfect entries. Here's another one, would have been another perfect entry. Because we are above this high time frame EMA, you can see it all just lines up perfectly. Same thing happening here. Since we got this downtrend happening over here, this is where it officially broke the EMA. It broke, and then usually when it breaks, it comes up to retest. And you can see it's coming up to retest. It's also coming up to tap into a supply zone over here. Well, didn't quite make it all the way, but almost. So, I mean, at this point, could have been a place of entry. If you wanted more confirmation, these two down here would have been more perfect entries. You can see we're on a downtrend. Price is above the value lines. So these, even down here, look here. If we come down here, perfect entries. Above value, below the EMA. You can see when price is below these EMAs, we know we're in a downtrend, especially 1 hour. We're in a 1 hour time frame with the 200 EMA. So when price is under a 1 hour time frame and a 200 EMA, it is confirmed very bearish. So then all we need to do is we look at indicator X and look here. Perfect, guys, perfect entries. Although I am still on a 1 hour time frame, so I wouldn't be entering on the 1 hour really. I would be, you can see if I mark this out here, okay, I'm just going to mark this out over here just to select the area. Then I'll go to my 15-minute just to show for this demonstration. So even if I'm not looking at the 15-minute EMA right now, I know, okay, look, I'm gonna set this EMA to the 1 hour chart because that is where I did the bias. Yeah, look. So if you set the EMA to a higher time frame chart, like a 1 hour chart, I like to use a 1 hour chart. I don't like to use higher than that. Then you can see here, as price is underneath this EMA, we're looking for our shorts when we're only looking for shorts, guys. Remember, when it's under the EMA, we're only looking for shorts. And when price is closest to the EMA, that is the best time to actually look for these shorts because we have this mean reversion. If price drops further away from the EMA, it's going to snap back to the EMA. So this would have been probably one of our best entries short. And you can see over here, we've got more opportunities over here. If you were scalping, this still would have been a great scalping trade. But these are all the opportunities where it's above value, and above value. So you can see these would have been still great entries to take. And then price dropped all the way down here, would have been another great entry to take. And then price comes down to a point, and then we get this reversal back to mean. So the further away price is, you can see the further away price gets from this EMA, the greater chance it can reverse back. So using an EMA as a companion tool with the strategy is extremely effective. You can see we would have got a good entry here as well. Another good entry here. I mean, there's so many good entries. This would have been another good entry. And you can see we can line up now. We've got a supply zone in this region. So we can start looking, and obviously we can look at the TDIX for even more confirmation. And you can see we've got this red dot happening over here as well in this region. So there's multiple things you can look at. Once you understand the indicators, I know, like, if you're still a beginner, I wouldn't recommend looking at too many indicators at once. Just pick one of the strategies. I recommend always starting with Trend X if you're new to the Easy Algo system. And as you get better, as you get more proficient with these indicators, then the fun really starts, because you can start layering these indicators and you can start stacking the confluences in your favor to make amazing trading decisions. And then you can see over here, we got price break above, it broke above the EMA over here, the 1 hour EMA. And then from this point onwards, if we had to go like onto a 5-minute chart, we can know this is where we want to look for long positions. And this was the trade of the day over here, which would have been a very amazing long position. So one of the methods we can use, and then obviously remember we're using it in combination with the flatbacks as well. We want to look at flatbacks. We want to look at the EMAs, and then we can also quickly turn on the Trend X to look. And look, if I turn on the Trend X, how amazing is this, guys? Like this would have just been so many confluences for today. We're above the weekly pivots over here. We're above the EMA. So at this point, when we turn on indicator X and we start getting these contraction boxes forming, it's so much certainty that we're only looking for longs underneath these value lines. We can mix in price action, grab a demand zone. We can also add in the TDIX. We look for these shark fins, just like the strategy shows. And then we can start stacking all these confluences in our favor. And it can really just help us get more precision on our entries and on our trades. All right, guys, I think I'm going to open the floor to some questions now. I can see there's some questions. You guys got your hands up. That's awesome. Let's hear those questions. I think Emir is first.
Hi, Seth.
Yes, how's it going?
I think I was there.
Then it's Sam, then it's me.
Okay, perfect. Awesome. How you doing, Gordon?
So, yeah, great, thanks. Okay, I'll just ask one, and then I'll come back to my.
Yeah, go for it. Go for it.
Can we please look at BTC and ETH for entries using the indicator X for the last
BTC?
maybe 1 to 4 weeks?
Yeah. Okay, let's go. BTC, and what's the other one? ETH.
Ether.
Oh, ETH. Okay. Yeah, let's have a look. Okay, let's start with the Bitcoin. And let me quickly add ETH to the chart. Okay, here we go. So using the exact strategy I was showing now. Okay,
yes, please, yeah.
Okay, so if we look at Bitcoin here, you can see we've been in quite a big downtrend. You can see, if you look at the candles, you can see predominantly we've got bearish 12-hour candles happening pretty much all the way down. There hasn't been too many solid flatbacks. Look, if I take this off, you can see it's lots of like indecision, but it's been on a downtrend. You can see confidently, if we go into a 1 hour, let me go into a higher time. Look there. If we go into, let's look on a daily. If I go into a 2-day, you can see that is showing us we've got a succession. We've got multiple bearish candles forming over here. So you can see we're on a downtrend on BTC within the last 2, 4, 6, 8 days. We've been on a downtrend there.
Yeah.
So then if we come on to our lower time frame here, let's turn on the, you can even see here.
Can we go back to the point where you were comfortable that we would have identified there was a downtrend? So I presume it's 9th or 11th of June.
Yeah.
And then maybe track it down in real time, pretend real time, to see how we would then identify. So at what point would we take the entry? What point would we then go, right, we now established a downtrend, let's go to the lower time frame, if you could please, just so I understand the thinking process in real, in sort of in small steps. Perfect.
So you'll see if we add all the confluences now, we've got the EMA. You can see the EMA is here. We're underneath the EMA over here, and we're underneath the weekly pivot. So pretty much at this point, the exact point I marked out here with the flatbacks, which is right over here. At this point, we can be pretty confirmed that we're in a downtrend because we're showing bearish Heikin-Ishi candles. We're underneath the weekly pivots, and we're underneath the 1 hour 200 EMA at this point.
Seth, has
If we look,
that flatback closed? Has that flatback, by the time you've identified this entry point, has that flatback closed, or is it in the middle of closing? At which entry, where in the process of flatbacks 2 days would you then go to the 5-minute chart? Is it
what do you see?
when the flatback closes?
I wouldn't have needed to look for that in this scenario, because I would have seen that, look how many other confluences we have. We'll see here prices underneath the trend X and underneath the EMA. So I think like I wouldn't have had to wait. I wouldn't have had to get too many like clues from here. I would have just added all the clues together. I mean, this alone would have been a strong enough confirmation here below the EMA and the trend X. But I mean, just looking at these bearish candles would have been a good sign as well. But like, I wouldn't have had to, if I was just going off of the Heikin-Ishi, then I would have waited for probably like a 60% close of this candle, which would have probably been, I don't know where it was. I don't know if we can't really reverse one candle to find out where it would have been, but it probably would have been, I'm not too sure exactly what it would have been. But I mean,
so you've picked the 2-day because rather than the 12th hour.
Yeah, I just picked it because it looked clearer.
The 12th hour wasn't.
Would
you always swap between them? Would you always swap between them, Seth? You would just swap between 12 hour and 2-day, or do you just decide it's going to be?
I will go through multiple time frames. Like I'll even go at the weekly. Like if you look at the weekly, for instance, you can see we've got a weekly indecision candle. So
yeah,
I mean, this could have been a good sign as well. You would have seen we've got bullish candles, bullish candles, bullish candles. Then we've got a bearish indecision, and then we get a bearish flatback. And this is a weekly.
Yes.
So I mean, that can show us that, like the weekly candle is very, 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 very good information, like really good information. It can give you like an overall picture of what is actually going to happen on the lower time frame. A lot of people don't really go onto such higher time frames. But I like to go in there, and then I would go to like a 3-day, have a look at the 3-day daily. It's just a quick run through of observing. There's also another tool which I've given people access to, which is this higher time frame Heikin-Ishi, which is basically working on the higher time frames as well, which does the same. It does the same thing. So that's also a tool you could use in this situation. Otherwise, I will just do a quick stroll, like if we go into the monthly, the monthly is still bullish. If we go into the weekly is bearish. So if we get a bearish weekly candle, that can be a strong sign that there's going to be bearish movement on the lower time frames. You can be pretty confident.
Seth. I think I'll let somebody else get in, but before you just go, where would the stop loss on this trade be?
The stop loss on this trade would have been either above the trend X or just above the value line. You can see, we actually, this trade didn't even go above the value. Like, if I turn off, our best entry is always going to be above value. I'm going to turn off the EMA just to show you here. Our best entry is always going to be above value, but this chart was so weak, it didn't even get back above value. It just kind of dropped. You can see it just, but
that's a good enough place to take an entry just below value line.
Yes, and you would have put your stop loss just above the, like over here, just above the highest point. Or the previous value line is a very good place to put it, because if we calculate these value lines correctly, it should not go back. So the previous value line acts as an invalidation zone. So that would have been a very good place to place it. But you can see this. Yeah, pleasure.
Thank you. Really, really good. Thank you.
Awesome.
I'll let somebody else jump in.
Sam, it's your turn. Go on, Sam.
Hi there, Sam.
Hi,
Are you there?
thank you very much, Seth. Was trying to unmute myself. Look, I've
Okay.
been trying not to ask you questions for the last couple sessions because I was thinking how to position my questions because it's kind of
Okay.
really important questions, like for me at least.
Yes.
First of all, I went through the live trainings, the videos on Discord, and
Yes.
then I'm keep getting like trying to copy your settings on your indicator X,
Yes.
because on several occasions I like I see now you use two different time frames, like you use longer time frames, yeah, high time frame bias, and then use 5 minute for the entries, right?
Yes.
um do you mind just to quickly show the settings on your left chart on your indicator X, and then on a
Yes. Yes.
smaller time frame, so I because this is kind of confusing me, and then I'm trying to find ideal position, just to see what you're seeing, and then probably that would boost the confidence because
Perfect. So
um,
with my entry time frames, I'm pretty much just mainly using 3 and 3 on the contraction swing sizes.
on a
Just three,
smaller
three.
time frame, yeah, on
Yeah,
the 5 minute.
on the entry. Yeah, 5 minute, even on the 15 minutes, whatever entry time frame. I found 3 and 3 just to be the best one. So I leave my entries on 3 and 3 most of the time, and I find that works. You can pretty much leave it on 3 3, and you never need to change it again for your entries. And then for the higher time frame, I'll use a 2 and a 2. So those are really the two settings I'll use. 2 2 for the higher time frame, and then 3 3 for the entries.
Amazing, amazing. Because I noticed that all the videos were made on a different time scales. I mean, different time frames, and then you keep changing your strategies. Well, not keep changing massively, but on some videos
Yes.
you go for 3, some on 4, some on 2. So most up to date is 3, 3, and 2, 2, right?
Yeah. I think the more I back tested and tested out, the more like it changes and I get, but right now I've come to the conclusion that 3 3 is perfect for the lower time frame and 2 2 is perfect for the higher time frame. You don't need to change it again.
It's perfect. What about the multi-chart, multi-bar and a 3 bar? What's going on there with yours?
And with
Yeah.
those, we don't you don't actually have contraction swing sizes because it operates off candles. It operates on a different function. The multi bars are primarily price action based, so they're only operating on the size of the actual candle, and not really there's no contraction swing. So there's no settings to change on those.
Okay, so you don't use 2 bar, 3 bar, you use only multi-bar, yeah?
I'm using only multi bar. I do use these, but I see a lot of people are in the group are still trying to understand the multi-bar. So I didn't want to start introducing 2 bar and 3 bar because then I think it would create a lot of confusion.
Yeah, so I guess you do stick to multi-bar, right? And max bar
Yeah,
is
yeah. Multi-bar is the main one, and I would say definitely it's
time,
definitely the major part of this indicator. So I think just stick to that so we don't
mu-
create too much confusion.
of course. And time frame is a chart based, yeah?
Yeah, yeah. Time frame is the chart based. Or what I'll do is sometimes I'll have two indicator X's on a chart.
Yes,
One
yes. You do run
because that
two.
because then I don't have to keep looking at the higher time frame. It's another method I've been playing around with, which works really really well. Better so I don't want to create too much confusion, having too many indicators and lines. But otherwise, it's basically just like having. You'll see if I turn the indicator X on here, it's the same. This is my 12 hour one, which is my 12-hour chart. You see over here. And then I have my 12-hour indicator X, and then I have my chart one, which is the 5 minutes over here. So it's basically those are the main ones that I'm using.
So multi-bar settings were so you tweaked it to 12 hours. Does it mean that on a time frame I also have to be on 12 hours, or do I have
No, no, you
or
don't. You don't. You don't. It means whatever time frame you're on, it will only show you the 12-hour value lines.
okay. Okay.
So like right now, I can be on a 4 hour over here, but it's only showing me the 12-hour value line. So the value lines will stay the same no matter what
So,
time frame I'm on here. They
gotcha,
they will.
gotcha.
So if I'm on a
And
4 hour, it's showing me the value line perfectly. It helps. It can help a lot if you don't want to have two charts, because sometimes I didn't want to have two charts. So I would just stick on one chart and then I would have this there and it would show me my value line, higher time frame value line, without having to go back and forth on different charts.
So 12 hour, you're finding like a sweet spot, yeah, for the value line
Yes.
to identify.
Yeah, I love the 12 hour. For me, the 12 hour is just so perfect. So perfect. You can see I've back tested it a lot. So through my back testing, I've just found the 12 hour to be the best one for me personally. So that
Exactly.
whenever I teach, I always teach the 12 hour and the 5 minute or 15 for entries.
Perfect.
Awesome.
Thank you very much for running through the settings. So another question was about the price action of the altcoins in regards of the Bitcoin. So what I'm finding is, I mean, I'm not opening America right now, but everyone knows this, but whatever the Bitcoins does, so and every single altcoin will be mimicking its movement, isn't it? So that's there is no argument about that, right?
So, majority of the time,
maybe with a slight time lag, but the majority of the times they all do follow the Bitcoin. So my question is, does it matter? What's the difference between trading? I mean, if that's the concept, right? What's the difference between trading Bitcoin and altcoins? Is there any difference then? Because percentage movement will be the same, right?
Yeah, the percentage movement will be very different. So like 1% to Bitcoin will be maybe like 3 to 5% for an altcoin.
Oh, so there will be more gains from altcoins and more loss from altcoins as well.
Yes, much more. If Bitcoin drops 5%, the altcoins are going to do 10, 15%.
Higher risk, higher reward.
Yeah, much bigger movements, because Bitcoin is a very high liquidity, whereas a lot of the altcoins aren't anywhere as close to liquidity. So they have less liquidity, which means the market, the price moves much bigger percentages. So if you can coordinate, so for instance, if you can see Bitcoin's going in a downtrend and you can find an altcoin, it means you can trade that downtrend and get potentially bigger rewards from it.
What I'm doing is I'm actually using Bitcoin as a flagship coin, obviously. And if I see it on a engulfing bullish or bearish, then I know that altcoin will be moving that direction. There's like, it's not optional for altcoin, isn't it?
Yes, exactly. Yeah, that's it. That's a great way you're doing it. It's perfect.
Yeah, that's pretty much okay. That's it from me for the moment. Thank you very much, Seth, for answering my question.
Yeah, it's a pleasure. All the best, Sam.
Hello, Seth. How are you?
Hello, Amir. I'm doing fantastic. And yourself?
Great. We had a little bit of a problem yesterday with Dave. We were using the Lux to confirm some trades and we were looking at the snake eyes, the green dots. And
snake eyes. I don't even know what
that's what he calls them. You know, the red and the green dots that are on the TDX.
Yes.
That's what he calls them. I thought it was something that you coined there. He calls them snake eyes. You know, when there are two dots printed very close to each other.
It's very cool.
My question was, first, when you have these dots, whether it's green or red, on all of the time frames, starting from 30 minutes all the way up to the daily, isn't that a confirmation of some kind that the trend is going to go upwards? Or is it?
It definitely is a big possibility. So whenever we get the dots, it's showing that a bottom could potentially be forming. But what I've noticed, sometimes you'll get one dot and it will work, it'll bounce, but sometimes it won't. It'll still drop, So I think with TDIX, it's also got to be taken in consideration as a companion tool. So also with levels in mind, if it's reaching a potential level and showing a dot, rather than it's showing a dot, let's just take a long trade now,
I mean, are you training Dave yourself, or is someone else teaching Dave?
Who's Dave? He's
Degen Dave.
Oh,
going down
Deej and
to,
Dave. Yes,
yeah,
yes, yes. I've been doing private training with him.
yeah, because yesterday when we took the trade, I was already on the trade, and he was going for a long on the same coin. And
Yeah.
I looked at, because we were on the weekly narrows being published party, that
Yes.
powerhouse. We were there, and I was looking at it, so DJ Dave is number one at the moment on the trading uh, the competition there.
Oh,
Now, I,
fantastic.
I am not in that sphere as him. So I'm looking at what you have taught us and what Promat has taught us. And the narrows were below. And the dailies were below the narrows and they were tight. Technically, we're going to go down, and we're going to go down pretty hard. But
Yes.
David, which I respect him, he was going for a long. And he says it should bounce because he was looking at the snake eyes, as we call them, the dots. And remember this snake, Seth, you're going to confront him and tell him about snake eyes. And he went for long. He actually went into the trade. I was already 40% in profit last night.
Okay.
And what I want to ask you is, uh, I think there could be uh, a situation that Dave might not be understanding it on
Okay. Yeah.
some level. I mean,
Okay. I see. Yes, yes. I understand
I
that.
respect him. I, I, I'm not blaming anyone, but I was seeing it totally different due to the education I had from you and from Matt,
Yes.
and he was
Yes.
seeing totally the other thing. And maybe you could. And the coin was AIG. Sorry, let me you him again. Is AGI.
AGI. Okay.
Yeah,
Yeah,
that's the thing.
I can
And
definitely,
how you said,
he's only done 2 short trainings with me, and I don't think he's gone through any of the training material. So it's possible that he doesn't have a good understanding of it. It's
I
possible.
think he's looking at it and doing it with the way he does Luxembourg, because your time
Uh,
frames are 1 hour and 5 minutes. He's going
yes.
through all the higher time frame. Okay, that has convergence, or it confirms certain things. But the
Okay.
way he's going, he's doing the high time frames like Salga. Just as a heads up, because it's your.
Okay. No, thanks a lot. No, I mean, I don't want him to be teaching it wrong and making
He's
mistakes.
talking on the. We have about 200 or 300 people on the show, so people might
Yes.
get a wrong idea. But
Yeah, exactly. No, that's fine.
this is
I will chat
my
to you.
private chat to you. I'm not blaming anyone, right? I'm just
No,
trying to
no, no,
help
not at all. Not at
everyone
all.
get better.
I'll chat to him about doing another training session just to see how well he understands it. That's all,
All right. Cheers, man.
Thanks.
That's my 2 bits.
Thanks a lot,
It's
Emir.
Tobias, the next drummer. 2 drummers back
Okay.
to back.
Oh, there's another drummer? Really?
I'm a drummer too. Was
Ah,
anyway.
I see. Hey, Seth. Great to
Hey, how
see
you
you.
doing?
Oh, well, to
Yes,
you.
you too. You too, man.
I'm okay. I'm okay. I try to make it short because you had a really long session now. So anyway, I was not trading so much the last weeks. So I found my own strategy a bit. Like I told you I have
Yes.
like 3-4 hours in the morning.
Yeah.
So I thought, okay, I have two options to do it. So I had like 30 coins on the side, and I was going through, and I just looked through, and I was looking for the best flat back candles. And then I thought, okay, because everything else I would not anyway do it with the strategy, right?
Yeah.
So you think this is a good plan to go ahead like this when you're scalping, especially for scalping, and I do this 4 hours high time frame.
Yes. Yes,
So
exactly. I think it's good.
Yeah.
Yeah. I think it's very good because you'll see some high Kanishi candles will look better than others.
Yes. I mean,
So
I
you can,
saw that most of the coins, the meme coins or the low coins, they do most of the time the same move, but some of them are just better with the flatbacks. This is what I realized. They are more farther
yes.
with.
No, that's
So,
brilliant. Then
mhm.
sorry there.
No, yes, no. I'm listening.
No, I was saying, because then you can just determine some coins will just look better than others. You know, they will the charts will just be easier to follow. So I think if you look through a lot, you can probably find some that just look like, because the more obvious it looks, the better it is. You know, you don't want to sit there and try to figure out if that looks good or not. It'll just be obvious to you, and you can just pick the obvious ones. You know.
Yes, and then what you recommend? Because if I do, for example, I do 3 coins, and I make all the alerts like on supply and demand, shark fin. I have like 20 alerts, man. I can play drums to this shit. This is like big.
No, I know what you're saying. Yeah, it's crazy.
So just do 1 coin, or what do you recommend to this?
Yeah, pick like one, 2 coins, like 2 or 3, maximum 3 coins.
Yes, because when you have 3, you have already like, let's say 20 alerts, right? Or let's say 50. So, well, what you say, like, also, I mean, I asked you this question already. Is it like the time, you know, when you say, okay, morning, I mean, Forex, of course, we know all the opening, the London and everything.
Yeah.
But you would say this is also connected to the trading sessions, or because, I mean, coins you can also do at weekend, right?
Yeah. I mean, I don't prefer to trade on the weekends, because I've noticed that every time I trade on the weekend, the volatility is not that good, and the trading does not. But I've got some friends who are Forex traders and who trade cryptocurrencies, and they will still trade the same session. So the New York session, I'm not too sure what time it is, but they will wait to trade the New York session for crypto, and the London session. Those are the main sessions they will look to trade on crypto.
Yeah. So I mean, the London session, I had to get up in the morning at 6. It's a pain in the, you know, this is terrible. So this, for me, always crypto was a bit more, because Forex you have to be there, and and crypto you have a bit more chances. Like even if you do Asia session, or you think Asia session will be okay also?
Asia session, like, they've told me a lot of manipulation happens in Asia session, so they prefer just to stick to New York. They said the New York session is one of the best ones for them to trade, which is, I'm not too sure. But you know what? It also depends, because there's a lot of coins that it won't matter. You know, you see, you get a lot of alts that kind of move with the flow, like Bitcoin. You see a lot of coins will follow Bitcoin, but then there'll still be a bunch of coins that don't even follow Bitcoin at all. They do whatever they want. So
yeah, that's
I think
what I thought when the guy before asked. You know, he said he follow Bitcoins, but there are a bunch of coins that don't follow Bitcoins, altcoins. They just go in another direction, right?
Yeah. No, you see, so it all depends. There are coins that do follow Bitcoin, and then if you're tracking those, you can use Bitcoin as the father. But then there's like the rogue coins that just do, I don't know, they operate on their own mind, you know.
Okay.
So it all depends what you're looking at. Like today, for instance, the whole market was dropping, but the first coin I showed you, I think it was CV. It was pumping, you know.
Yes,
it was
I
not
saw it.
following. It was not following the market. So in that case, that can be a good coin to trade, because it's not following the heartbeat of the market. It's doing its own thing.
I see.
So and oftentimes I will look for that. If I want to find a good trade, I will just look at something that's performing differently from the majority, and then that becomes the coin I will look for, you know.
So I have 2 questions now about your trading. So if you do full time trading, you are just okay. You have all these alerts. So you know what I mean. You also like scalping, I know, because when you do all these alerts, sometimes you're just waiting, and it's like sitting on a bomb. You know, when is the next alert coming? You cannot just relax. You know, this is what I just don't like this feeling to always sit on this, and when is the next alert? Okay, and then. But you are doing it like this, right?
Yeah, it requires a lot of patience. In the beginning, I got very restless because I couldn't wait. So then I would end up just getting into any trade I can find, because I'm too. You know, it happened. It was really bad for me in the beginning, because I was waiting and waiting, and I got impatient. I couldn't wait. So then I forced the trade, and then I end up losing, because if you force the trade, you're going to lose. So,
Yes, I think I'm exactly right now in this state.
It requires a lot of patience. I tell people,
Yes,
if you're
yes,
patient,
yes.
become even more patient and more
Yes.
patient and more patient.
I see, I see. My last question. I just heard you doing also private teaching or something like this.
You know what? I have been doing it, but lately I just don't even have time for it. So
Uh,
I had a lot of people message me about private session, and I did quite a few sessions, but lately I've just been so busy. So I've been giving it over to Pramod. Pramod's been doing private sessions kind of
mhm.
to help me, but he doesn't have that much experience with Indicator X, but
Yeah,
he's a very good teacher. At the moment, I just don't even have that much time. Like my days, like today, I have not even one break the whole day from the
I
morning,
see, I
So
see.
I
Yes,
don't
yes.
really have the time, but if I do, I will definitely open it up, as I really love the private sessions a lot,
Yeah,
just
yes.
time.
Just maybe I don't need much at the end. I mean, I'm really kind of confirmed with this strategy now, so it's really going. But
Great,
before
great.
I like one or two private sessions, and at the end, and that's it. I don't need regular, but this would be great. That's for sure.
Perfect. Yeah, well, like if I do have space open up, I can definitely let you know for sure,
This is
100%.
amazing. Okay, it's always good to hear you because it's like with trading, you go in this hole, then nothing, then you think and that, and then you talk to you, and everything is clear again, and then it just no. But this is good. I told you it's good to have a mentor because
Yes,
sometimes
yes.
it's really, and then my friends, they brought me to your indicator. They already gave up. They told me, "Oh, it's amazing," and I checked it, and now they gave up. And
Oh
this,
man. Yeah,
yeah, and
it happens. It happens. It's trading it's hard to become a trader. You have to go through a lot of pain to
I
get to
know,
the rewards. And a lot
I
of
know.
people can't go through the painful stage. It's like I don't know if you've ever done a martial art. My brother, he teaches Brazilian Jiu-Jitsu, and he
Ah,
has 80%,
do Wing Chun
80% of the,
for
what's that?
years. Wing Chun for years. You
Really?
know,
No ways.
yeah, you have a
No,
black
yeah.
belt.
Wow, that's amazing. Very, very cool. But majority of the students, they have an 80% dropout rate because they can't get through, to the next level. And it's with everything. And trading is one of those things. If
Yes,
people take one or two losses, they can't handle the loss, and then they stop
this
trading.
this is the thing. That I'm a musician since I'm 18, and I know what does it mean to make money out of music and to go ahead and have bloody hands from playing drum. Well, it sounds very like a movie now, but it is. It's you can compare it. This is for sure. This is for sure.
Yes.
Thank
It's
you
with
very much.
everything in life. It's with anything in life. If you want to become good, when
Yes.
things get tough and you want to give up, you actually have to keep going.
Always,
It's
always. I tell you, even now I'm learning. I'm going to 50 now, but I'm always doing new stuff, going, learning, meeting people, going, and so I can still live from music. This is the good thing, and it's really tough.
yes, yes.
Yeah.
You'll never stop learning. It doesn't matter what age you are.
Oh yeah, yeah. Oh, thank you very much, Tess. Thank you.
Thanks, Egg. Good chatting
Good,
to you.
good, good.
Go on, Rico, it's your turn.
Hello, Seth. Thank you for doing the session.
Yeah,
I have
pleasure, Rico.
three questions.
Yes,
The Heiken Ashi
yes.
settings, I have only three alarms settings. Can you show them on your...
Yeah, only three alerts. Wait, here we go. Yeah, here.
And you have six, or...
6.
I only
That's
have...
very...
Are there versions of different versions?
Yeah, that's
No, there's
that's
only one
also my
version.
question, because in my trading view, my Heiken Ashi overlay just named Heiken Ashi overlay and not plus flatback detector. Is this kind of
Yes,
new version, or?
it's the same with me.
No, it's the
I have
only
the same
version.
as well.
It's the only
Thank you.
version that I've uploaded for everyone. There's only one version. That's so strange.
Okay.
I'll have to let me look into that, because the one I'm using is the one everyone's got. There's only one version I upload for everyone in
Yeah.
the group, and everyone's using the same one. So I don't
Yeah.
understand.
You
Yeah,
have
I thought it's maybe an
Yeah, I
old
haven't
version,
got that
so
one either.
I deleted my cache and also looked to warp again, but there's still this like only Heiken Ashi overlay.
Yeah, it's the
And you
same
say
with me.
it's just got 3 alerts here.
Yeah.
We all have 3.
Here it says Heiken Ashi X in my trading view.
Yeah, exactly. So looks
Okay,
like
let
a
me
different one.
yeah, let me look into it. But is everything working? Are the alerts working? Is it all working?
Yeah, that was the
On your side.
second question. How does it work? Because when do you get the sound, or how do you see if it's setting or connecting?
Yeah, so you just choose the one you want, and you can add a Heiken. You just right click on it. It should
Okay.
just work, and you can. So what you'll do is you'll right click on the actual. So once you've set all these settings correctly the way you want them, then you
Yeah.
right click on the candle and you can say add alert on a Heiken Ashi candle, and then you say create over here.
Okay.
So
Okay.
so it'll say any alert function here, and those alert functions will be based on the settings you had over here. But you have to right click on it and click add alert for it to work, and then click create, and then it
Okay.
will work.
Yes.
Cool.
Okay. Thank you. So you will check the first question.
Yeah,
If we
yeah.
have everybody has the same Heiken Ashi, because I have
Yes.
the Heiken Ashi X. Okay.
I'll definitely check that out. Yeah.
And the third question was you can also do the bias with the VWAP.
Yes, yeah, exactly. You can definitely. Yeah, definitely. The VWAP is a great tool. I didn't go into all of them, but the VWAP is great. The EMA is great. I mean, this VWAP, if you set it on just the monthly, because the monthly is quite a high time frame, it works brilliantly. Like you can see, if it's above the monthly, it's pretty much in an uptrend. If it's below it, like now, it's in a downtrend. So the VWAP is a very good tool as well, which I didn't mention today, but I will definitely mention it more in the next training. But it's a good one to use as well.
Okay. That's it.
Look, yeah, I mean, this example, this would have been perfect. As you saw that, now you're just looking for short positions. And then if we come onto the lower time frame, there were probably so many good entries that we could have found over here. There you go. See, so if we just followed the VWAP, this would have been the place we would have looked to enter. And look at all our trades we would have got initially. We would have got this one. Yeah, it worked. It works wonders, definitely. But remember, there's always going to be a place where there's going to be like, you'll see this reversal occur. So sometimes it's good to add in other confluences, but as long as it stays underneath here, we're on a downtrend. You can see. All right, any more questions?
Yeah, thanks. I've got a couple of questions just to pick up, maybe some
Yeah.
quick fire things. I think a
Yes.
couple of times we've sort of suggested that we can have a cheat sheet with these indicators and the settings for each one for the short term, long term, medium term, or whatever. Is there a reason why that's not possible or inadvisable? And then if you change your mind, like you do some more back testing and you're saying the 3-3 is a really good setting and stuff, then you can just alert us, that you've changed the cheat sheet for those settings, because it really shortcuts the learning curve. I mean, several people have mentioned it in the chat today, as well as in other calls. Is that possible, Seth, or is there something we're not seeing that's causing that would cause a problem?
It's definitely possible. I mean, I don't personally think it's that necessary. I mean, like, there's not much to, like, for instance, the VWAP, there's no real settings on here,
Seth, with due respect, you're the guy who invents this stuff. To you, this is just back of hand stuff. For us, we're learning 56 moving pieces on 36 different indicators. It's not quite as easy as you would think it is, because it's yours.
How would you like it to be done, the cheat sheets? How would you like it to be done?
Buy and sell.
I would go ahead. Somebody else has a suggestion?
No, just the buy and sell button.
A buy and sell button?
And
Yeah,
sell button
Sorry,
and
I'll-
then
yeah.
Homework.
take my money. Yeah.
Yeah.
I wish it was
mate.
that easy.
Yeah, I
Like a
wish it was that
robot.
easy.
sorry, I had to say it.
So-
I had to say it.
So for example, on the indicator X, you know, you have
Yes.
certain settings, 3 and 3 or 4 and 4 or whatever for different time frames. You know,
Yes.
just something as simple as that would be good on,
Okay.
you know, on TDIX. You know, there's not that many, but there's enough to go, right now I'm doing this other one. What settings? I can't remember what settings.
Okay.
If we
Okay,
just had a
so-
cheat sheet, I mean, each one
so
of us could
basically-
make one, but then
Yeah, I can make one. So basically, I'll just have indicator X, and then I just have the base settings, and then
Yeah.
and then the next indicator and the settings. Like, is that all you're saying? Just the
Yeah.
indicator and
I
and the
think so.
settings? Okay,
Something
yeah.
like that
Yeah.
as a start, and then we can add to it if we need it. But
Yeah.
just
Yeah.
something on the basic indicators, Heikenarchi,
Yeah.
the Heikenarchi overlay indicator. I don't know if there is indicators for that. I don't know if there are.
I mean, there's
you know,
there's
Yeah.
no real settings.
So then there's the multi-bar. You know, there was multi-bar or majors only. You know, those sort of
ATRX.
settings are
Yeah. May I
ATR.
jump
You know,
in?
so
Maybe
they're yeah.
it's,
Please go ahead. Yeah.
maybe something like say we imagine in the indicators that you change settings according to a higher time frame and entry time frame, like you
Yeah.
do kind of a cheat sheet. Imagine the ATR or
Sheet.
the
Okay.
value lines that you see
Okay.
for higher time frame. This
Yes.
setting
And then
here, and lower
Okay.
time frame, this setting should change to that. So the entry time frame, which is should adjust a setting, can be a range. There is no
Okay.
there is no magical number. Sometimes, for
Yes.
instance,
Yes.
in the ATR, we must play a little bit to our trading style, because we
Yes.
can have a much more or less reversals on the ATR as we wish, and yeah, just kind of a range 0.9 to 1.2 and
Okay.
1.4 to 2 point whatever in the entry time frame, higher time frame this, entry time frame that. That's would be my as I see it. I don't know if the other guys agree, but
Yeah.
kind
Good.
of
I like it.
yeah.
If we have a starting point, Seth, if you can, then you
Yeah.
know we can go from there. But at the moment, you know, there's just so many. If we just have a starting point, if there are any then improvements, we can then, you know, one every week we can improve one or something. But right now
Perfect.
there's quite a few moving parts that, from what I sense, there's quite a lot of confusion. Not only if it seemed, I thought it was only me, but you know,
Well,
it appears there are one or two other people.
Perfect. Yeah, I
who
can. What
would
I'll do is I'll
appreciate
just make
that.
I'll make a very basic version, and then I can show you, because you can be a good reference, and you can let me know if I'm on the right track or if there's other things to add.
Yeah,
or
because you know one of the things you do really well is you train, but sometimes you're sort of going, when you click this and you click that and you do this and you do that, and you're, because you know these entries so fast, I have to slow it
Yes.
down to like 10% speed to try to watch where your mouse is to see
Okay, I
what you're
see.
doing. To you, it's
Okay.
like completely second nature. And it's like,
Yes.
you know, you're just moving your hand in front of your face. It makes no difference to you. But for
Okay, I
us
see.
learning it, there are so many moving parts and so many different
understand.
options that you can
Yes.
click a box and, you know, I think one of the things you had multi-bar or majors only, and, you know, there are just, you know, so many that it
Yes.
can, instead of causing clarity, can cause confusion, which then if
understand
you're
that, yes.
confused, you then don't take any action, you know, or
No,
you take the wrong
exactly.
action, like Dave, for example. So it's just, you know, just a suggestion just to help us out.
No, I mean, this is
And
for you.
also
It's for you.
yeah. No, and I appreciate that, and that's why I'm saying it. You know, it is for us, and we do mention it.
Yeah.
There's few people mentioned it, and the other thing is, you know, if when you're putting the events live, and the password is always easy algo, a lot of newbies don't know that, and if you just put it on with the alert, you know, just put the standard thing in and just say password is easy algo, then you won't have people stranded going, "How do I get in?" Is asking for a password.
You know
Some
what?
people
We
just
still
don't
get
know
people
this
asking.
stuff.
We still get people asking for it, even if I put it there.
We help
Yeah,
them
but if
out.
you put
Don't
it
worry.
there, you know, there's one more chance of not getting the question. You know, it's just, it doesn't take any time from an admin point of view, is how I see it. And it could
Yeah, no, it
save
doesn't-
one
it doesn't.
person reaching out in the chat saying, how do I get in? I'm trying to get in, and it's asking for a password, because not everyone knows. It takes no time, but you know, it just makes things life a bit easier. I don't know. If you don't want to, then don't.
Definitely.
But I'm just. It takes no skin of your nose, and it's probably a lot of skin on somebody else's.
Correct. I also find not anything personal. Generically speaking, as humanity, we are getting in general very lazy, and we need everything in front of our eyes. We are used to this
right.
each more we are used to this direct stimulus that okay, we have all the answers, and we are losing the ability to read everything what is written, and to understand and to look for information.
Yes.
Yeah,
100%.
so yeah, it's. I'm not saying that you should not put the password more visible or in caps lock or whatever. I'm not saying that. It's just also my observation for sometimes some questions that I see. Man, this is just 2 clicks, a little bit of time, but we are in a very speedy world where we need all the information that someone tell us without us to look for it. So
I agree. Yeah. 100%. 100%.
Sorry,
That's-
just
oh,
one
sorry.
quick. Yeah, go on.
If you wouldn't mind, if it would be okay for you for one short question.
Yeah. Last question.
Yes. I'm sorry.
I go on too. Sorry.
I ask you for Scanner X with this Indicator X strategy. Okay, you
Yes.
say you can also take it to terminate the trends, but today you saw that it's sometimes it makes confusion. So the trend X comes a bit later.
Yes.
So still you would say it's a good tool also to use for this strategy, or is it like lagging, or you say
It's I still think it's a very good tool as a companion. So, but if you're using it, you're not trading we've got a trend X strategy, which has its own strategy. So if you're going to be using the indicator X strategy, then you're just using it as a companion. So you're just checking if it aligns with it, then it gives you even more confidence. And if it doesn't align, then you can either wait for it to align to give you more confidence, or you can just take it off because sometimes
this is not what I mean. No, I got this. Know what I mean to find trends. Like, you go on the app and I told you before, I'm looking for 20 coins for
oh yes, it's good for that. Definitely, it's very good for that. Like if you find it, like for instance, I've back tested with Indicator X that as soon as price is above, let's just say a weekly or a monthly pivot. So let me take this off. If price is above, let's just say it's above, I'm just going to mark this out. If price is above a monthly or weekly pivot and you open Indicator X, the chances are very high to look for longs is going to be very good, very, very good, because it's a trend. It's basically Indicator X is a trend tool. So if price is above the pivot, it's showing you this is the best time to look for longs on Indicator X.
Of course. Okay, thanks.
I've used it like that, and it's brilliant like that. So you can start just looking with Indicator X. I mean, just trend X, and if it confirms, if price is above, then you can immediately just come to a lower time frame and look for entries on Indicator X.
Okay, thank you very much.
Sorry, just last question. I know we already talked about it, but in the if you go to the BTC USDT pair, and in the daily or 12 hours, you see which contraction box and its value line do you use for your like higher time frame value line or bias? Like,
are you talking about with these here?
Yeah, do you use like the last contraction box or like which value line? Is it the a gray one you're using for your higher time frame value line?
In this scenario, you would use the red one because at the time at this time this one's not confirmed. So you can see we would have used a confirmed one. If you've got a gray and a red next to each other, the best is always to go with the red one.
Okay, yeah. And you're setting here, or like you're at 12 hours time frame. You're setting in the and the indicator X, it is at 12 hours as well, right? The
Yes,
move to
yes, that's
bar.
right. Yeah,
Yeah.
I've got it set as 12 hours, so it stays. I like to keep it on the 12-hour one.
Okay, perfect. Thank you so much.
It's a pleasure, pleasure, pleasure. All right, guys, that's all the juice that's left in the engine today. Thank you for being here and all your questions, and definitely taking it all to heart and doing the best we can to help you on this trading journey. Have a wonderful evening.
Always
and we
amazing.
will-
Always amazing, Seth. Always amazing.
Thank you, Gordon. All your suggestions are taken to heart, I promise.
Thanks, man. Bye.
Seth,
Cheers, guys. Take it easy. Have a great night.
Join the
Take care.
VC.
Oh, yes, yes. Hop in the voice chat with Power Friend guys to continue. Never ends, guys. The fun never ends with Easy Algo. Cheers all.